The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we've got some rocking and rolling today, folks. We're going to start off today taking a look at the German DAX at the 4-hour chart. You can see we had that big ABCD down at major support. Those of you that belong to the 24/7 service, I sent out a 10-minute video last night, folks, on the importance of yesterday's low because it was spot on. One standard deviation down from where it was supposed to be at 37.03. And last night, you'll never guess what happened. It was really quite interesting to see the market start to move higher. It just took off like a striped deer and never looked back. Let's just get this up here so you can take a quick look at it here. Hold on one second. And it happened at about 4 in the morning is when it started. And how high it's going to go is anybody's guess. But when we see things like what's happening to GameStop, I mean, and even American Airlines, can you believe the swings we're having in American Airlines? Folks, this is right out of Jesse Livermore's description of what happened during the 20s and 30s. So pay attention here, folks. This volatility, I said it was going to get great, and it is, believe me. Now, let's just look at GameStop. Just take a look at this yesterday. I'm doing this for, hey, look, I don't have any interest in this stock. I don't have nothing to do with it. I'm just showing you the technical things of how it works. You'll see we had an ABCD structure there, and it gapped from 140 up to 250, which was above the 1.618. You see it came down, touched at the 1.618, and all I did last night, and I don't know anything about where this stock is or where it's going. I just did a very, very simple ABCD pattern on this, and it gave a price objective of 525. And I don't know if it got there or not, but the last I saw it was like 4.25 or something. So these things still are, I looked at a 15-minute chart on it too, just by watching Bloomberg, and it had a beautiful 382 retracement. Yeah, well, there you go. Very, very close. Tommy said that when this thing ends, it's going to end really badly for those people that are long, and it's already been bad for those people that are short. But this is not indicative of what's really going on in the markets. But if it can happen to them, it can happen to you. So be very, very careful. You have to use stops in these markets, folks, because they can just, we're in an area we haven't been in this area before. Anytime in our country and also now in the markets, we're starting to see this type of volatility. American Airlines up 65%, I think today, or was it 95%? I mean, some ridiculous amount. And so it's at 3:30 now. See, there we're almost there. So we'll have to see what's going on. All right, let's just move on to a couple other things that I wanted to cover here. We have Stan Harley is going to be our guest today. So let's remind ourselves that that's what we want to be looking at. I wanted to give you just a tiny bit of what we call feedback from someone about the NASDAQ. And all I was looking at yesterday was that big move right up here at the 1.618 expansion at 13,600. We dropped 600 handles all the way down. We're rallying back strongly today, which is either a short covering rally or it's a start of the new bull market. Who knows? We have to wait and see. But it was certainly apparent that it was really important support last night. That's why I spent some time with that video to show how important it is, because going below that level is really, 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 really bearish. And the reason why is the option sellers, these guys that price these options, it's all based on the standard deviation of a move. And if you go more than one standard deviation in a week, that is really, really, really important. And that's what's happened. We've hit one standard deviation on Wednesday. Here we are on Thursday. Instead of going down, we came right back up, which was not unexpected because that's such an important support area. Also sitting right at the 60 51% retracement didn't give it any help either. So it's going to be very interesting to see these things move farther. Now, to break off a little bit, I wanted to show you something that I think is very, very important. It was in the gold market this morning, and I posted this because we were getting ready to break out. And I just wanted to show you that dark black line that you see there is a valid trend line. Now, I had to raise the line above the actual highs because of the fact that you wouldn't be able to see the ratios that were there. But once we went above 1846, folks, it was game on. And that gave us a price objective of 1858 in the gold. I don't know if we've got there or not because I haven't been able to check the prices, but it should be pretty close to that. Let's just take a quick look where we are. Well, looks like the gold hit, if that's correct, we hit 1859. In fact, we're there right now. There it is. It just made that level. So we'll see if that's going to be anything or not. We'll watch it very, very closely here. Okay, now, the reason why that is a valid trend line is it's breaking actual ratios. Now, when Hearst did his book, that's where the valid trend line concept come from. He did not know the Fibonacci ratios. If he did, he didn't put them in. And I know he didn't because Jim was my customer when I was at Drexel, and I talked to him about that before. And when we showed him those numbers, he was quite excited to see it. But anyway, when it breaks those numbers, it sets up the ABCD. You can see the bottom low last night was at 62%, setting spot on at the 51% retracement level, and it hit it twice. You can see the double bottom there. That's an important double bottom at 1836, and now it's blasting higher. And we've reached the number, the 786 on this comes in at around 1862. So above 1862, you've got a really big move to the upside. So that's what that is about right now. So we'll see if it's going to mean anything or not, but it's important to take a look at it. So those are the important things from last night that I think is very, very interesting. Let me know if that GameStop hits 535, okay? I just like to know just for personal reasons. Now, Jim Flanagan, who's one of the best guys that I know in the business for GAN. In fact, he's the only guy I know that's good with GAN. 20man is, but he's private. He doesn't show very much at all here. But here is a chart that Jim sent out. He's looking for a top here in corn, in March corn. He thinks this is a double top, and folks, it certainly could be. This has been a heck of a run from 330 up to 550. So that's a $2 run in corn. We haven't seen anything like that in a very long time. So Jim is looking for a possibility of that happening. So we're looking coming out with that. So some of you guys might help me with something. I imagine this GameStop has options. Is that correct? That's probably where all this volatility is. Oh, it has to be because I heard it on Bloomberg that these hedge funds were option sellers. But they used to have a rule that you couldn't sell more than you couldn't sell short more than the value of what the number of shares outstanding. But they used to have to borrow stock in order to go short. Yes, Jim Flanagan is crafty. Not only that, he's a great stand-up guy too. They do have it. Okay. All right. I didn't know that. I really didn't know. That is old school. I guess it is. Yeah. Well, see, I don't do stocks, so what do I know? Hey, we're going to take a break. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart last night on the copper. You can see the double bottom from the 23rd of December to the 28th of January. We had a really nice Gartley sell signal up there at 365, folks. This puppy went from the 349. We touched that low, matched that low from December 22nd, and I just checked the price here. We're trading at, I believe, 366 or something like that in copper. I mean, that's a heck of a move. That's 20 cents in copper. So something big happened in copper because it went back and completed. We're almost at a 78% retracement of the whole move down that we made from 374. So there's a great deal of stuff going on in these markets, and this is what we want to do. Hey, look, if they can do this stuff with Redid It and all this stuff, hey, they can do anything if they want. Hey, folks, just for... At the end of the day, what I do to get ready for the show today, I try to get things that I think are of interest that, you know, we can look at charts together and stuff. And there was a comment coming on about Apple's earnings. I'll cover that in just a minute. But Mr. Zuckerberg came on and was really complaining. Read it. Oh, read it is how it's done. Thanks, David. Read it. Okay, good. Yeah, well, that makes sense. Read it. Okay, anyway, Zuckerberg was on complaining that it was very difficult to compete with Apple because they had a monopoly. When I saw that on the news, I just I couldn't get over it. Anyway, let's move on to the next one here. Let's take a look here at Apple. One of the things that I look at when I'm watching things is how the market reacts, you know, to good news and stuff. And we had some pretty good news in Apple. And I was expecting, because of the fact that it made new highs at 145 and we'd been there for several days, I was expecting that the earnings were going to come out and get it up to about 156. Well, that didn't happen. And I said right here that there should be really strong support down here at that 135 level. Below 134, it's not going to be very bullish on Apple because that would be really bad action good news. And that's the kind of thing that you use to realize that something is changing in some of these markets, and that's why you need to make a very, very important a point on it. All I do know is that we go below the lows that we made last night. That is not very good, because that was spot on all three of them, folks. I went through it. I went through in that video last night. We did it in the Dow Jones Industrial Average. We did it in the Nasdaq. We did it in the S&P. We did not do it in the Russell. It didn't back off enough, but all the others certainly did. So that's the importance of that low last night. Circle that. So we'll see whether that's going to mean anything or not. I know this stuff is getting a lot of press on Read It and stuff like that, but frankly, that's not how the stock market works, where something goes from 10, to 513. But if it did, it did. These things have happened before. Those of you that have been around the markets in the dot-com bubble, that thing lasted for 2 years. We saw stuff, even if they had a sales call where the phone would ring, the stock would go up 25%. And if the sale was made, the stock would go up 50%. And, we saw story after story of these things that, went bust. The NASDAQ, folks, went from 5,000, all the way down to 1,800 or something like that. It gave back 87% of the whole move in 2000 all the way down into 2003. And you think it can't happen again? Well, just wait and see. You'll see what will happen someday. But whatever day that is, I don't know. I focus on what I have to risk at any one particular time, and that's all I'm interested in. We've had a nice run here in some of these things, and I hope that we'll be able to continue to see it running. But by golly, you just never know. They follow these numbers pretty good some of the time, but they don't do it all of the time. It's all about probability. It's not about perfection. Perfection, you better go find something else to do, because you're not going to find it in trading. Trading is, you got to be watching your backside, just like in defense. Everybody's talking about the Super Bowl coming up here, and they're looking at these two fabulous quarterbacks, two of the best that we've seen, even though the young kid is, my God, what a career he's got. He's only been doing this 3 years. He's been in 3 Super Bowls, I think. I mean, that tells you how good he is. But you base that chart, or how that game is going to be based on defense, folks. Just about every major Super Bowl is based on a defensive play of some kind that changes. You can remember the defensive play against the Seattle Seahawks a few years ago. They were ready to score, and they threw the ball right on the goal line, and the guy intercepted it. I mean, that stuff like that happens. So you got to focus on defense, and that's what trading is all about. It's about the defensive position of what you're looking at. So give me a second here so I can update all these things to see what we're looking at. Yep, it's about as expected. Had a very, very, now this might have been a short covering rally in the market. We don't know yet. It's still a bit early, but we'll keep a very, very close eye on it. Anyway, review the video from last night, folks. If you got that, it's really worth, to me, it's worth the price of admission. And the reason why I know that is two of my very dear friends complimented me on it, and they don't compliment me on anything. So that's one of the things that you got to remember here in this business. One thing is sure, folks, just take a look at this. We talked about this at the beginning of the week. We talked about it last week, and let's talk about it again. Because, yes, that's my old buddy Pete Carroll. He basically destroyed the football program at USC by leaving all those players in the wind. Anyway, this is the volatility index, and I believe we're going to be trading up above 50 regularly sometime in 2021 here. That's my opinion, because we got this long-term base. We've popped above it a few times, and now when you're seeing things like what's happening with Read It and with GameStop, I don't know. Look at American Airlines. I mean, for heaven's sakes, I looked at that today. I mean, sure, the earnings were up, but give me a break. There's nobody flying. Folks, Sarah and I fly 30 to 50,000 miles a year. We haven't flown last. We didn't flow. We didn't fly in last year. From January to January, nothing. We didn't even get to see our grandkids, and we didn't get to go to Hong Kong. We didn't go to Europe. I mean, this said stay-at-home time. So we'll see how this all works out. I don't know. Well, that's it. If you have any questions, it's 877-927-6648. One other comment, too. We've talked about these astrology guys that come on here, and they said there's going to be some really wild and woolly ways, and maybe this thing with Read It is what's going on. But Read It is no different, folks, than what happened in Livermore's book. Read that book, Reminiscences of a Stock Operator. It's all about tipsters and stuff like that. That's all Read It is. It's electronic tipsters. And it trades nicely. Go look at it on a 15-minute chart or a 5-minute chart. I happen to see a picture of it, and I could see the ratios just as easy as pie, the ABCD patterns that were there. I mean, they're there, and if you wanted to buy it, you certainly could. I don't know anything about the options. I don't even know if options are open after hours. I didn't know you couldn't short stock that was more than the float of the stock, but that's also something that's not very, very good for the markets. That economically makes about as much sense as negative interest rates to me. But I think, anyway, we'll just keep an eye on some of these things. Let me double check the prices. I wanted to see where the gold is, because we should have had some pretty good resistance up there at that end of February gold at 59. We're trading at 1857 right now. And we're going to see if this is going to be anything at all to hang our hat on very, very closely here. So let's move on here. We'll be right back with Stan Harley, 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archive subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Stan Harley on the line. Stan, how are you doing today?
Good morning, Larry. Doing just awesome.
Stan, is any truth to the rumor that you put a buy recommendation out on GameStop at $15 a share?
Absolutely, Larry. Absolutely.
Well, they're having some fun with that stock today, that's for sure.
Indeed.
Do you have it? Stan, you've been around almost as long as I have, and we see these things occasionally. We read about them, of course, going back into the time of Jesse Livermore. But do you have an opinion of what's going on in some of these things? It just increased volatility, or what? What do you think it is?
Well, Larry, as the market has crept up, the volatility index has contracted. That's normal. And then when we get a sharp sell-off like we saw yesterday, then, of course, volatility expands. But it's all part and parcel of some cycles that I see and have tracked for a long, long time. We'll get into that here shortly. But I think we've got a pretty solid bull market on our hands here. I don't think this thing is done by any measure at all. I think we've got plenty more bull market ahead. Although in the short term here, I think we have some consolidation to do. The market was really overextended here, and it just can't continue that angle of ascent forever without some kind of pause to refresh. And I think that's exactly what we're seeing developing right now.
Okay, you want to talk to us about your first chart we're looking at, the daily SPX?
Indeed, yes. Sent a couple of charts over to you, and we're looking at the first one. That's a weekly chart of the S&P 500 going back about 5 years. And as one can see, we've been on a steady, what I call a northbound ascent. The market's been tracking upward, punctuated by a couple of major lows. One we saw in December of 2018, the next one in March of 2020, and we've been powering higher. But we're certainly extended. We're above both the 15, 50, and the 200-week moving averages. And I think we've got to take a little pause to refresh here, but I think the trend remains northbound, Larry.
Okay, now I noticed you have a blue mark there on one of your trading cycles that should have landed. So the next one you're looking at should come in around the 10th of February. Is that correct? 9th to 10th of February?
Well, as we shift to the second chart here, shows what I call the primary cycle and the trading cycles. And Larry, I found that the dominant cycle on an intermediate time frame averages about 34 weeks. That's roughly 160 some odd trading days, or in terms of month, it's about 7.5 months, and that's trough to trough, bottom to bottom. So if one looks back at the charts over many, many years, you'll find that that's a very, very dominant intermediate cycle, and you can see it here very clearly. The most recent low in that cycle occurred on October the 30th. Prior to that, we had a low on March 23rd, and so on. Now, each primary cycle, which I said averages about 160 some odd trading days, is typically punctuated with what I call 4 distinct trading cycles. So if you take 160, you divide by 4, you get 40. So each trading cycle tends to span, on average, about 40 trading days, although rarely do you see a trading cycle from trough to trough exactly 40 trading days. But if one looks at a sufficiently large enough sample size, one will find the average, or I should say the median, not the average. The median falls right around 40, give or take. The last primary cycle, which spanned March 23rd of last year to October 30th, that was 155 trading days, trough to trough. You divide by 4 and you get 39 trading days on average there. So right around 40 plus or minus. Wow. And I've shown number 1, 2, 3, 4. Now when you get to the primary cycle bottom, the count starts all over, and we are in the first trading cycle right now. This one has expanded. It went up 58 trading days from the bottom. So I would expect we're overdue, of course, historically. And I would expect us to go down here. And I'm looking for a low in the vicinity of February 9th, February the 10th. And with trading cycles, we tend to see this rule of alternation. That is, if one cycle contracts, the next one expands. then the next one contracts, and so forth. So the prior one, which went from late September into late October, that one contracted. So this one's expanding. The next one will probably contract. But you'll find over the long haul, the average will probably fall right around 40 trading days. Wow. So I'm looking for a low, Larry, in the vicinity of the 9th/10th of Feb. And I think what we're going to see here is something very similar to what we saw in late June of last year. In late June, we saw an initial low on June the 15th. 2 weeks later, we saw a low on June 29th. That second low had some divergences. Of course, this is the S&P chart. You can see the June 29th low was higher than the June 15th low, but basis the Dow, it went lower. So I'm looking for something similar here. I think we saw an initial low yesterday that's going to be somewhat equivalent to the low we saw on back on June 15th. And then in another couple weeks' time, around Feb 9, Feb 10, we're going to see a low roughly akin to what we saw on June 29th. That will be the orthodox trading cycle low with some divergences. Maybe the Dow goes lower or some other indices go lower. I don't know. But that will be the low that powers us back to new highs.
Okay, wow, that's really interesting. Now, Stan, one of the things I did before you came on the show is I talked about the valid trendline concept from Hurst's book. Did you ever do any work with that?
I have Hurst's book on my shelf, and that's been my go-to Bible ever since I got into the cycles business.
Uh-huh. But do you use do you use that valid trend line? You know, when it breaks a valid trend line, it says the trend is up. Do you ever use those?
No, I don't. I am familiar with what you're talking about. Trend lines work when they work. And I do look at them, but I put a greater emphasis not on a break of a trend line. I put a greater emphasis on cycles. That's my style.
Sure. Well, you've done a great job with it. I mean, it's for 7. Stan, what are you going to do now that they have the timer digest is going out of business? How are you going to show how good you really are? You're going to have to come on our show more often, I think.
Well, very kind of you. Thank you. Yeah, for the listeners may not be aware, first Mark Hulbert shut down his Hulbert Financial Digest a couple of years ago, and now sadly Jim Schmidt Jr. has shut down Timer Digest as well. That's been the dominant tracking entity for all things market timing. They've been tracking me every day for 25 years. Now they're gone, so I don't know what's going to happen here, Larry. It's kind of unfortunate, but they had some business pressures here that forced them to shut down.
I have a pretty good idea what's going to happen. Not much is going to happen to you, buddy, because when you have that long a track record, people don't forget that. And you're a stand-up guy, and you've always given us the best of what you've got. So don't worry about it. You're going to be just fine. We will have you on more often if you don't mind, maybe a couple times a month just to be safe, okay?
I look forward to it. Thank you, Larry.
You bet. Stan Harley, folks, a Stan Harley Stock Market Letter. We'll be right back, folks, right after this break.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Direxion's daily S&P 500 bull and bear leveraged ETFs. Direxion leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit direxioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we want to thank Stan Harley to be on. I just got some information that they're going Stryker Commodities or Stryker Reports is going to reporting stuff like that. So we'll have to let Stan know that would be something to go on with replacing Time or Digest, because people like to know, what people are doing, and I think that's important to pay close attention to. Now, regarding the corn, we've had a nice move in corn this morning. We went above the old highs by about 10 cents. About 7 cents. We hit 5.62 in, am I correct on that? 5.52 on the March corn. We're now trading at around 5.46. And what Jim Flanagan was doing when he was watching this was looking at the price action of what could happen at a new high. And hold on here. We're getting a question coming in across the board here. Please show the low risk short on the Nasdaq again one more time. Well, that happened. That happened on actually. Well, yes, I can do that. Z, hold on a second here. I think I have it here. Here's the original chart. This is the one from the newsletter. Let me get. This is a good question, by the way. Here's the good chart on the newsletter from last Friday. We were looking for the 1.618 expansion to come in at 13,588. Now, after the Microsoft earnings, the market went up and hit 13,600. It went up another 12 points. And from there, we went all the way down. You can see we came all the way down to, we dropped 6 handles last night, right near the 61% retracement. That was one standard deviation. If you go back and look in August, when we had that big drop in August, that also was standard deviation stopping. That's why it's so important. That low from last night is because that was one standard deviation. It was nothing more than that. Now, what the theory is that number is so important that option buyer, these guys that do the options, they come in and protect their positions. Now, whether that's true or not, I don't know, but that sounds logical, because once those things go below those levels, they have major exposure and they have to cover their positions, and that causes this tremendous volatility. So that's why we're watching this. So pay close attention to those numbers, folks, because it's all about numbers. This thing about the stock market is just like baseball and other sports and the NFL, whatever. It's all about numbers and probabilities. They know what the statistics are on these, and that's what they rely on. The same thing in poker. you can play poker, you can play every hand, but you're going to lose. You have to play the hands that, are going to give you the best probability of winning. And that depends on a whole lot of different factors, just like same thing in trading, folks. I hope that helps, Mr. Z. Is that what you wanted to see? That's where it came in, and then we went right down to that low yesterday. Looked like the end of the world with the Dow down to 600 and some points, and sure enough, you turn around and look, and there you are. Holy man, we're really having some movement now. Holy cow, we got the Dow Jones up 385, the S&P's up 44. Oh boy, we are smoking and joking. This is what we like to see. Okay, let's move on here. We got the gold up $16. How's our copper doing? Let's see how it got to. Well, we got up to 359 from 349, rallied 10 cents. And who knows where this thing could go. Looks like we're going to rally into new high ground without any much trouble at all. It must have been a buy signal come out from something now, because we got the S&P up 43. We got the NASDAQ is up. How much is the NASDAQ up? It's up 119 after being down 250 yesterday. Looks like we're heading up to the 50% retracement on some of these, so we'll keep a close eye on these as we watch these throughout the morning. But it's still early in the morning, folks. A lot of things can happen. As Tommy said, any market that can go up from 10 to 512, 530 can go back down to 10 very, very quickly. We've seen that happen, more than once. So that's something to pay close attention to as we're watching some of these things unfold here this morning. Okay, now if we take just a quick look, I want to give you 1 second here. I want to show you a quick look here at the foreign exchange markets. If you'll give me 1 second, I'll get it up here, and we'll be able to show you very, very quickly here. By the way, the 61% retracement on the S&P, folks, is at 38.01. We're at 37.85 right now, and we did go down the 61%. Let's just do that to show you last night how perfect that darn thing was. I'm sorry to get off my train of thought here, but I wanted to show you this. I think it's relatively important to show you this bottom that we made here in this S&P last night. You can see the 61% retracement in there at 37.10. And, then we've rallied all the way up to 37.85 this morning. And 38.01 is the 61% retracement of the whole move. And we went through the 382 like it didn't even exist at 37.65. And that's to do for the morning session, because early in the morning is when all these things really start to unfold. An hour and a half later, it's much safer to trade the S&P, because all of the buying and all the selling is over at that time. So what you're dealing with now is just a normal type market, because these markets have a tendency to accelerate because of algorithmic trading. And we've seen it over and over again, and you don't want to stand in front of it, because it can be a little bit tricky. In fact, it can be more than a little bit tricky. Okay, now let me get over to the foreign exchange markets. I wanted to show you something about the euro, because we've been relatively bearish about the euro for quite some time. I want to get this chart up so you'll be able to see where we are. And you'll notice where you'll be able to see where we put the short in up there at that 122 level. And we came all the way back down last night. You'll see we made the big ABCD down to the downside. Great place to cover the short down there at 120.75. You can see the ABCD pattern right there. And now what are we doing? We're making an ABCD pattern. Now, this is an hourly chart, so this is an important chart, folks. This is a beautiful 135 pattern. You can see the three lower highs. I want to draw them in to let you take a look at it. This might not work, but this is the kind you want to be watching, because these are the patterns that you're trading in the direction of the trend, and they give you a really good shot to control your risk. So I'm going to bring this up, let you take a quick look at it, and I'll try to get this out soon enough, because you'll be able to see where we are here. We shouldn't get any higher than 121.65. We're trading at 121.43 right now. We just completed a small ABCD pattern in the hourly chart over the last 2 days, and that should be a very, very interesting spot to see if that is going to see the market heading a little bit lower or not. We'll have to wait and see, because it's still, very, very early in the day. We've got a long way to go for the rest of the day, so we want to watch it as close as we possibly can. Well, we got a break coming up, 877-927-6648. Tomorrow we are going to have our friend and fellow market technician and astro technician, Mr. Shane Smolian, as our guest, and he will be giving us a lot of really good information. In fact, he's going to be talking to us a little bit about Striker.com if you want to track people that are, showing their results and stuff, which is always nice to see that go through. Been there, done that. Those days are over. Anyway, let's take a look here at one other thing. Oh, we got a break coming up, don't we? Shut the front door. We'll be right back. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We got the market Dow up about 400 points. NASDAQ up about 87, the S&P up 41, and the Russell's up about 27. We're having a very strong rally, folks. The important thing is to watch that bottom that we had yesterday in the S&P. I've also posted the chart of gold. I still believe that we are looking at a price of $1,700 an ounce. It's 160 from where we are right now. And I believe that if we get above 1,900, I will be wrong on this. But right now I have to stick with this pattern. It just sets up absolutely perfectly with time and price and everything else. So that's what I'm looking at. At that point, at $1,700 an ounce, I'm going to get very bullish on gold and very bullish probably on silver too, if we can get silver down to the $22 per ounce level. But those, those are really long-term projections. Whether they're going to happen or not, I don't know. But they're fitting patterns that we've been watching for quite some time, and I think we're going to be very, very close to those numbers probably in the next 3 or 4 weeks would be my guess. Remember, the volatility is going to increase in everything. We're seeing it not just the real that is in the news, of course, is GameStop and American Airlines and things like that. But we could start to see these things happen in everything, folks. That's not unusual because people that can read it might know it. And then you have to be able to understand that, for every buyer, there's got to be a seller. And believe me, like Tommy said, if it can go from 10 to 512 or 520, whatever it was, it can easily go back to 10 again. We've seen it happen more than once, and it's not an easy game to play, but it's fun to watch. And I try to keep things a little more sane when you're looking at these things. So let's remember that it's not going to be an easy deal. But let's remember, folks, that there's always another train coming by. So you don't have to miss something. You can always, catch something that's going to be pretty good. So at least do one thing for me, and that's live every day in an attitude of gratitude, and may God bless. And also, if you would try to do something nice for one of your neighbors that's having a rough time, because, folks, these people are having a trouble. 877